Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast presented in short and informative episodes. I'm your host, Matthew Sewick, also known as the Friendly Financial Coach. On today's episode, we're going to cover the information that was shared by the federal government earlier today about the aid plan to assist Canadians. This program mainly focuses on providing a basic level of income support to Canadians, to assist businesses, and to reduce some expenses. As we discussed in the last episode, one of the primary goals of this financial aid package is to reduce the impact of a cash flow crisis that can affect Canadians. This crisis is marked by a drop in income due to a variety of different reasons and expenses that are staying fairly static or slightly decreasing. The big danger here is that incomes will fall below one's expenses, creating a negative cash flow situation. Keep tuned to Simple Money Podcast to keep up to date on the financial aid that is issued by the Canadian government and other ways that Covid-19 has been impacting our finances. The first part of the income aid package was released last week through a modified version of EI sickness benefits. This benefit pays up to 55% of average weekly earnings, or $573, whichever is the lowest, for up to 15 weeks. This income is fully taxable, so it's important for households to plan around that. For those that are using this EI sickness benefit, the first 2 weeks do not require proof of illness, but any time longer than that does. Also, the 1 week waiting period has been eliminated for now. This benefit is only available to Canadians that pay into EI and qualify. One of the biggest qualifiers for this plan is that the individual that's making the application has to have worked at least 600 hours over the last 52 weeks or since their last EI application. Unfortunately, part-time workers that may have not worked enough hours to qualify or self-employed individuals that did not pay into the EI program are not eligible for it. And some of the benefits issued today have been made to cover those gaps. The biggest of the announced plan is something called the Emergency Care Benefit, which pays up to $900 every 2 weeks to those that did not qualify for the EI program or do not have access to paid sick leave. This includes workers and those that are self-employed who are sick, quarantined, or who have been directed to self-isolate but do not qualify for EI sickness benefits. Workers including those that are self-employed who are taking time off to care for a family member who is sick with COVID-19, such as an elderly parent or another individual that is sick but do not qualify for EI sickness benefits. And finally, EI eligible and non-eligible working parents who must stay at home without pay because of children who are sick or who need additional care because of school closures. For those that may not qualify for the emergency care benefit, another program called the Emergency Support Benefit has also been created. This program offers similar features to the emergency care benefit and lasts for up to 14 weeks. The full details of both emergency programs are unclear right now, but what we do know is that this program will become available in early April, and applications can be made through CRA Online, Service Canada Online, and through a special dedicated phone number. Individuals will also be required to make an online attestation every 2 weeks to keep on receiving these benefits. Another increased benefit has been announced to help families with children. The Canada Child Benefit is being boosted by up to $300 per child. This non-taxable benefit can be very helpful to families. The CCB program typically has a clawback associated to household income, but it's unclear if that will apply in this situation. It's also unclear if the amount that a family receives will vary by a child's age. For students, there is also a 6-month moratorium on student debt repayment. During this period, student debt will also not have any interest accrue. This reduction in monthly expenses can obviously really help an individual out. For those that are making mortgage payments, some households will also receive relief. For those that have government-insured mortgage loans, their lenders have been advised to offer some relief and flexibility with mortgage payments on a case-by-case basis. The actual borrower will have to speak to their lender to see what options are available. The government has announced that payment deferral begins immediately. For all Canadians, the tax filing deadline has been extended to June 1st. And all taxpayers can defer until August 31st, 2020, any payment of income taxes amounts that have become owing on or after March 18th and before September 2020. This also means that anyone that's making tax installment payments can put a temporary freeze on this and use the resources otherwise. Also, the HST GST credit has been bumped up to $400 for a single individual or $600 for a couple. Also, for each child, you'll receive an additional $150. The next payment will be coming in May, and this can offer a small yet helpful boost. And finally, anyone that's withdrawing money from a RIF has their minimum withdrawal amount reduced by 25%. The reason for this is that individuals are not forced to take out from any type of investment that may be losing value. So that's it for now, but keep tuned to Simple Money Podcast for the most up-to-date information. As always, if you have any questions, you can send me them at info@ffcoach.ca, or you can find me on Twitter at @F_F Coach. Take care and talk to you soon.